Right, it is about treasuries and those surging yields. Investors seeing this week's U.S. inflation report as the next key event that will determine whether yields stabilize or push toward new highs. Our next guest expects U.S. inflation to moderate over the next 3 months. Let's bring in Rachana Mehta, co-head of Regional Fixed Income and Maybank Asset Management. Rachana, what's behind your projection?
Okay, because I was looking at actually the past data. Generally in March, the CPI tends to be lower. And I think the key feeding into that maybe the owner's equivalent rent. I'm expecting it to come down. So my view is that maybe market is expecting about 0.3%. And I do expect that it will be very similar. So I think the CPI data may be the key. And over the next 3 months, generally from March, April, May, I see that US inflation tends to go down. Maybe the consumer spending is slower, the retail sales are slowing down. So I definitely think that it is going to moderate. Of course, it may not go back to the Fed funds target, but still I definitely see a moderating over the next 3 months.
Rachana, is there perhaps any concern that the Fed may be too data dependent, bearing in mind data is actually backward looking?
Yeah, I totally agree. But what to do? Because the US nobody has seen this kind of such a strong economy. Maybe it is all the migrant workers which are coming, and there are a lot of part-time jobs available in the US, and that is changing the entire scope of the US economy. And especially oil, US used to import a lot of oil. Now it is one of the biggest exporter of oil. So I think I've seen the trend of changes in the US economy, and it's very difficult for people to predict. So everybody is like, the whole world is looking at the US data. And you can't help it because everybody thinks the data is going to weaken even the last year, but it's not happening. So to me, I think data is a key, of course, but it's very difficult to do a forward looking for the US data because the economy is changing in such a way, especially in the short-term trajectory. Plus, we have geopolitics. But I do think that the Fed doesn't have any other option unless Fed can have an intuition to see long-term. But I think long-term, definitely the US inflation is on an uptrend. It's very difficult to achieve the 2% target of Fed over the next decade.
Rachana, of course, the focus is on treasuries and surging yields. The big question out there, and the question we're asking today, is when do you see two-year yields getting to 5? And what happens to 10-year yields right now?
Okay, so in terms of 10-year yields, I think we are seeing, for me personally, I think about 4.5, or maybe it may overshoot 4.52, but it looks very, very attractive to go long 10-year treasury, especially before the elections, because just maybe till August, September, but after that, I think all the bets are off, depending on who comes to power. But at least before that, I feel that about 4.5, 4.55 10-year treasury looks attractive to go long duration. As of now, we are pretty neutral duration. I think the 2 years is very, very difficult. We do expect first rate cut in June because as I expect the inflation to moderate over the next 3 months, because otherwise, very close to the election, Fed may not want to cut rates. So I definitely think that first rate cut will be in June. I think a lot of market participants are pushing towards July, but I'm hoping that they cut in June, and my expectation is that they will cut in June. But in terms of 10-year, I think 450, 455 looks attractive. As long as the oil price stays around 85, 90, but if geopolitics shoots up and oil price goes higher, then maybe the 10-year treasury can go back to 460. But I think we are coming very close to the high for the 10-year treasuries.
So it is higher for longer. In fact, it is higher than most people expected and longer than most people anticipated as well. How do you play this market, bearing in mind that some are perhaps now saying that there's the risk of a default cycle to bear in mind as well?
Yeah, definitely. It's not been an easy market for people like us. Last year also we thought, so for the whole year, actually, if you look at last year, everything, we were very flat. We made most of the returns in November, December. So this year also, I expect very similar. You stay flat, just earn the carry, short-term carry, maybe 3-year, 4-year in terms of high yield segment. And when the time is right, take that big bet on duration and take the bet on dollar. I think for me, dollar is the key. When the dollar turns, that's the time actually to go short the dollars and long duration. So if you look at, despite the stronger NFP number this weekend, correct, the dollar is not very strong, especially against euro, Singapore dollar. Of course, China is keeping the renminbi strong. But definitely, when I look at the currency reaction, it is not as strong you would have expected, correct? Dollar should have strengthened a lot more, but it has not happened. So maybe we are coming that peakish dollar level. So we'll just have to wait and watch. But that will be the two trades which I see over the next 3 to 6 months.
The thing is, the dollar may not be too strong when compared to the euro and the SGD, but it has been way stronger and weighing a lot on emerging market currencies. I mean, where do you seek shelter? How do you play the FX space? Where are your conviction calls?
Okay, in terms of the conviction calls, basically we still like the Indonesian rupiah and Indian rupee. Of course, the rupiah has weakened a lot, but we are waiting for the cabinet lineup sometime in September. And that's the time because the carry is still attractive. The real rates are still very high, both in India and Indonesia. If you look at the real rates in Indonesia, it's about 3%. Real rates in India is about 2 to 3%. So I think these two currencies look attractive from a long-term perspective. Of course, RBI is going to keep the rupee stable. In terms of renminbi, actually, I feel that China is keeping a strong range because at one point they want to cut rates and at one point they want to keep a stable currency. I think they may lose the export competitiveness given that how weak the yen is and how weak Korea and Taiwan dollar is. So for us, I think that PBOC should slowly let renminbi go. And generally, when you look in April, correct, I was looking at the past data almost 10 to 15 years. Every time in April, actually, renminbi weakens maybe 1 to 2%. So I'm expecting actually the renminbi to weaken. Hopefully, PBOC will slowly start giving away the fixing. So for month of April, actually, I do expect renminbi to weaken. So actually, it's good to be long dollars against renminbi, and but I think continue to be long rupee and for the short term because the level of dollar is still not certain. So it's better to be neutral from a dollar perspective, but you can be long rupee and maybe once PBOC starts giving away the fixing on the renminbi, then no, you can be long dollars against renminbi.
Ruchana, speaking of the yuan, is there more selling pressure than the PBOC anticipated?
Actually, I see there's some selling pressure onshore because every time it is hitting the 2% level. I think over the last week, it did hit the 7.2367 from the fixing level plus 2%. So we have seen some pressure because maybe the local, they need to pay off some dollar loans. So we are seeing some pressure given. And if you look at the renminbi basket is almost touching 100. Whenever the renminbi basket touches 100, I think PBOC let the fixing go slowly. So but this time maybe because given the US rates are so high, I think PBOC is a little worried. So they want to manage the fixing. But I'm hoping that they will take the right decision, let the fixing go because it has to move with the basket, correct? And based on the basket, I think renminbi is still strong. So if they are really focusing on the basket, then renminbi should weaken from here.
Not too long ago, the yuan was a great carry trade, the yen as well, but now people are saying perhaps it's a Swissy. Your thoughts on the best carry trade out there?
Okay, it is very tough. I think for yen, I think market is waiting for intervention because if you look at, I think definitely the time is coming because it's very close to that 152 half level. So I think people are going to wait for the intervention. And generally, when the intervention in dollar yen happens, it can really move down $5, you know. So you have to be very, very careful to do carry trade now, especially in the month of April. But for me, I feel that if we have to look at the renminbi fixing. If you feel that PBOC is little changing the fixing, then that may be a very good trade to be at least long dollars for the short term against renminbi. But for yen, I find it very difficult. It's very, very volatile currency. We're almost coming at the intervention level zone for dollar yen.
Ruchana, before we go, just one quick question on gold. People don't talk too much about it, but it is currently trading close to record highs. I mean, what are your thoughts? Why is China, for instance, buying so much gold, buying for the 7th consecutive month?
Yeah, absolutely. Actually, not even China. I just heard that India also is buying a lot of gold. And I feel that people are just worried because US election is coming closer. So a lot of central banks want to move away from US treasuries and maybe gold as a good asset. And if they are wrong in inflation, the US continues to go. I think gold is a very good inflation hedge. We have seen huge buying of gold, even by a lot of players. Like I think in China, especially domestic players are not allowed to hold dollars. So maybe a gold is an alternative asset because they are not buying property. So where do they keep their wealth? So, and they're not allowed to buy dollars given the capital control. So we have seen that a lot of Chinese local retailers also have been buying gold as an asset class. I see some correction in gold maybe over the next 15 to 1 month, but I think from a long-term trajectory, given that central banks want to move away from US Treasury, they will continue to buy gold. A lot of Chinese domestic players, Indian domestic players will, I think, start buying gold, and especially everybody is expecting Fed to cut. Maybe they will not cut 3 times, but maybe they'll do 2 times. But definitely when the rate cutting cycle starts, also gold will tend to do well, and especially with central banks buying gold. Given the geopolitical risk, what's happening, also I think gold is a good asset class to have in your portfolio from a long-term perspective.